So we are here on 5.2. So in the previous section, right, we learned about how to properly purchase our items and what happens when we get discounts. Now, of course, if we have the capabilities to purchase our items, what happens when we need to return them or get an allowance, okay? Because oftentimes when we purchase items from a vendor, there are many reasons why we would choose to either return an item, right? Because damages can happen along the way, right? You might end up getting shipments, right? And the items might break in those shipments. They could accidentally ship you the wrong item, all right? They could even, you might have a cheaper vendor out there that might be, you purchase from them, and then all of a sudden, prices of things go up and their prices go up, and all of a sudden you want to resort to a cheaper manufacturer or whatever, then yes. Or even other cases, right? If customer service is not up to par, that could also be a reason why you would return or get an allowance for these type of purchases. So again, anything can happen, especially when you purchase things in large quantities. Oftentimes, due to shipment, things become broken. You test out your products before you sell them, find out that some of them are defective. And yes, many reasons that you can also have a return. Now, again, with retailers or, manufacturers or wholesalers, what they often want to try to do is they want to keep your business as a customer, right? Because if you're buying in large quantities, such as maybe thousands of units or even a couple hundred of units, right? You make up a pretty large, customer to them. So they want to keep you as a customer because you're buying a large quantity of their inventory out. So in this case, some vendors might be even willing to give you those special benefits or special privileges, right? Such as, discounted prices, right? They can even give you special offers. They can even give you unlimited refunds, no matter what it is, right? If you purchase an item and you're not satisfied with it, you could either refund it or they could ship you out a new one. Okay, and also you can get your money back guaranteed. Okay. Now, with that being said, right, with those special privileges, that means as a a retailer, right, you want to make sure that you sell to your customers the best products as well, right? So, with that being said, right, we're going to take a look at what happens when we need to purchase our items and what happens when those items become broken or when those items just become defective or whatever it is, okay? So in this case, right, let's go ahead and start with this example here. On January 1st, you decide to purchase 100 coffee mugs on an account from Cuppies Co., okay, which cost you $1.25 each, okay? And freight cost you $100, okay? Record this transaction, okay? So first things first is we need to first purchase the items first in order to create an account and then create your credit there. Okay, so in this sense, this is considered a vendor credit. All right. So first, we got to make a purchase first. So we purchase 100 coffee mugs. Okay, with the freight costing you $100. So here you go. Purchase expense, freight expense, and we have a purchased, a accounts payable because we put it on an account, right? Exactly just like this. Okay. Then, let's see what happened here. Then on January 5th, you received the items, and then you found that 10 of those coffee mugs are broken, okay? You request the vendor for a full refund, okay, because they're broken. And the vendor grants you a full refund. Record this transaction. Now, since we recorded our items as expenses, okay? And normally expenses are hard to reverse, okay? So in this case, when we do a returns, right, we're going to be taking a look at an account called purchase returns and allowances. So again, this is a contra account to your actual purchase expense. This account reduces the amount that you owe, or in this case, it also reduces the original purchase expense account. So in this case, right, if I originally purchased each coffee cup at $1.25 and I'm returning 10 of them for a full refund, right? 10 times $1.25 gives you $12.50. And that's going to reduce, number one, how much you owe, because that's what we normally do, right? You have those three options. You either receive a credit, which in this case, that's exactly what you're doing, okay? Second is you get a full refund and you get your money back, but in this case, I never paid. So this one is being applied to the invoice, which is option 3, to apply to the invoice. So in this case, right, they're giving back, or in this case, they're reducing the amount that I owe by $12.50 because that's the full refund that I got for those 10 coffee mugs, right, that was cracked or broken during shipment, right? Any questions here?
So then why are you going?
No. Okay. So now we have, okay, so why did I use this purchase returns and allowances? Now, purchase returns, this is a full refund. This is an actual return. Now, when we talk about allowances, they essentially do the same thing. So I just combined them as together in one account. Okay, so let's go ahead and take a look at that allowance section real quick, okay? So on January 5th, okay, you received your items, okay, and found that 25 of those coffee mugs were the wrong size, okay? And you requested for a full refund on the extra large coffee mugs, okay? But here's the thing about vendors and retail relationship, right? Customer to vendor relationship, right? Since vendors, right, are trying to sell you a product so you can sell it out to your other customers, right? So they're going to try to make deals and, you know, they'll even offer a discount for you. But because this was their fault, because we originally ordered a bunch of, was 100 of those regular sized coffee mugs, right? This time they made a mess up on their end because they shipped us the wrong item. However, they also have the capability where they can convince us, right? You guys always are going to go into some agreement, some kind of discussion where, hey, I'm going to offer you a 20% discount because I'm sorry, I didn't mean to send you the wrong coffee mugs. But in this sense, you could still sell those coffee mugs for a different price. And because I shipped you out the wrong one, you know, how about I give you a 20% discount off of those coffee mugs because, you know, to reprimand my mistake, right? In this case, if you accept that, then you accept it. If you don't, you can always refuse it and just demand for your full refund because maybe you can't sell those extra large coffee cups because, you know, you might need to use different cups, right? So in this case, right, we accept this 20% discount. So now in this case, it's only going to be that 20% discount off of the original coffee mugs that you are trying to refund. So in this case, right, if each coffee mug costs me $1.25 and I'm attempting to try to return 25 of them, okay, but I'm only getting a 20% discount because at the end of the day, I'm still keeping those mugs. The vendor just gave me a discount on top of it because they are trying to say, I'm sorry, that was my mistake. I sent you the wrong cups. Now, to keep you as a customer, we'll make you, we'll give you a discount off of these cups because it was our mistake to send it out, and we don't want you to pay extra or whatever it is, right? So in this case, we're going to take those 25 bugs, right? And we're going to times it by 125 because that's how much each cup cost me originally. And from there, I'm going to take an additional 20%. So I'm going to multiply that by 20% to get a grand total of $6.25. And because this isn't a full refund, right? It's basically going to be called an allowance, okay? So it's not a discount per se because obviously the price of the extra large coffee cups are going to be different than the ones that we originally purchased it for. So it's definitely not a discount here, like an actual discount. And then on top of that, this is a personal, discount because they're trying to fix their mistake. So in this case, right, it's going to be considered an allowance because you're not fully returning the items. You are keeping the items, but you're getting money back, which is considered an allowance. Okay, so that's why I usually tie in purchase returns and allowances under one same account. And what it does is you have those same three options once again. You can either save it as a future credit, which in this case we didn't. You can either give back money, which we never paid for. So the last option is to apply it to the invoice, which this is what we did. We applied it to that invoice or the amount that we owe. So we now owe significantly less. We owe $6.25 less than compared to the original $2.25. Okay, and that's how I go ahead and place that in there in my books. Okay. Any questions here? Okay, so here's a chapter review. Okay, so 5.3, right? We talked about making purchases of our items and then being able to return them or get a discount off of them, okay? So this is how we do it, right? We create a contra account called purchase returns and allowances to decrease our original purchase expense, okay? So there we have it. Let's go ahead and dive right into the exercises. Okay. So here we are, chapter 5.3, purchase returns and allowances for periodic inventory. And here, question number 1 says, journalize, assume that all purchases were made on an account. Okay, all purchases were made on an account. So let's go ahead and take a look at the first one. Okay, so here we are. Purchase 1,000 units at $5 each, freight costing you $100, and let's go. So April 5th. Okay. We need to journalize that we purchased inventory.
Would our first one be the purchase expense of 1,000 units at $5 each?
Okay, purchase expense. So all that information is going to be in parentheses. Okay. So we got purchase expense. How much is my total purchase expense for?
5,000.
What's my next account?
Free expense.
Yes, we have to do freight expense. For how much?
So we have $100.
Mm-hmm. And then last but not least, how did I pay? On an account.
Account pay.
For a total of how much?
5,100.
Mm-hmm. Okay. So that's the first thing right here. We journalize the purchase of inventory, okay? So then on April 7th, we end up returning 200 damaged units for a full refund. Okay? So for 7, we're going to be getting a full refund for 200 damaged units. Okay? Now, obviously, here's the assumption here, right? Whatever batch of inventory, right? The very first thing you got to do is you got to open up that box and count every single one and make sure that every box of shipments is there. Okay, because that should be number one. You can't be just assuming that each box, when it comes in, okay, I received my inventory. No, you got to open it up. You got to check out the product, because what if you wait till the very end of the month to crack open your box and you find out that your whole box of mugs were broken? There's probably, most likely, you're not going to get a refund back a month later, because you should have done your duty in the very first place to check to make sure that those items were okay before you verified that you received those items. So in this case, right, the assumption is that usually every return on something is going to be associated to the previous batch that you purchased. So in this case, this 200 units came directly from our original purchase of 1,000 units. So how do I calculate my return?
You could do the 200 units at $5 a piece.
Good. So how much is that?
1,000.
1,000. Now, what accounts am I going to be using?
The accounts payable.
We're going to reduce our accounts payable, right? And what is my contra account going to be?
Would that just be the refund for wrong size or damage?
Yes, but there's a specific account that I want you guys to use. What account would I use to reflect this refund?
Purchase returns and allowance.
Purchase returns and allowances. Good, excellent. Okay. And then in your note or description, right, you could say, I returned 200 units at $5 each for full refund. Okay. Good. Right, because 200 times $5 gives you 1,000, and that's what you're going to get a refund for. So then on April 10, we purchased additional 750 units at $5.75 with a freight of 75. April 10. Purchase expense, freight expense. Okay, but this time I'm purchasing 750 units at $5.75.
75.
Okay, so how much is my total purchases here?
4,312.5.
Right, and my freight was $75. So how much do I owe?
4,387.50.
Yep.
Okay, good. So now that I received that batch of inventory, on the 15th of April, I decided to return 50 of those broken mugs due to shipment, and I want a full refund. So 50 more items were broken. What do I do with those 50 broken mugs? And, well,
Account,
good, accounts payable.
account payable. 287. 1.50.
Okay, how did you figure that number out?
So there are how many there was? I don't remember. The 50. The 50.
Mm-hmm. 50.
Time 520. 75.
Good. Right?
Yeah.
You're going to take...
287.5. 50.
Okay. So you're going to take your 50 and you're going to multiply it by that $5.75 each to get a full refund of $287.50.
50.
Good. And I'm going to make another note here. Return 50 units, or you could say broken units if you want to be even more clear, at $5.75 each for full refund. Okay. So let me just extend a little more over here. Okay. So let's see what else happened next. All right. Next, on April 20th, right, we decided to purchase an additional 200 units at $6 each, with a freight costing $20. So I'm just go ahead and skip to the next one over here. Oops.
How many did you buy?
200. 200.
200. 200. How much?
At
What's the price?
$6 each.
$6. So 1,200. $1,200 you have as you pay the debit.
Mm-hmm. For $1,200. Okay. How much was my freight?
Don't know. I don't remember. Can you go up? So $50.
$20. We're on this one.
Oh, you're on this one. Oh, $20.
Okay, so $20. So then you owe in grand total.
1,220.
Good. Okay. So then on April 22nd, 25 of those units were the wrong color, and you were willing to accept a 20% discount. Okay, so you originally purchased them in a certain color, and 25 of them was the wrong shipment, so they're going to offer you a 20% discount because you can still sell those cups. They're just a different color. Okay? And 25 of them were the wrong color. So how are you going to journalize this transaction here?
If we do the accounts payable for the 25 units that we're going for,
Mm-hmm.
25 times 6,
Mm-hmm.
and then you have you have to add a 20% more, no?
Mm-hmm.
The amount. So you need $30. So 180 can be on paper.
Not 180. What's 20%? In this case,
Then
how did you solve? Okay, so you solved 25 times $6. What is that?
150.
Okay, what's 20% of 150? $30.
$30 because that's 180. Ah, $30. I get it.
Yeah, it's
20%
yeah,
on that.
it's
Yeah,
just 30.
yeah.
Yeah, it's just the 30% off because you already owe them
Yeah.
for the original amount. So you're taking off only $30.
Mhm.
What
Yep.
account am I going to use to reflect this discounted amount?
the purchase returns and allowances.
Good, because in this case, this is the allowance part. Okay. And here you can write your description, right? Allowance for 25 mugs at $6 each, 20% discount. Okay? And then you could say wrong color. Whatever you want to put in here. Okay, I'm getting allowance for 25 mugs because they at $6 each for a 20% discount because they were the wrong color. Okay. And then last but not least, we have on the 25th, go ahead and make that purchase for 500 units at $6.25 each. Okay, so here, perfect. Okay, it is 425. We purchased 500 units at $6.25 each, right? Yes. So what's my totals here going to be for my purchase here?
3,125.
And my freight was $50. So I owe 3,175. Good, right? Good job, guys. Okay, so remember, this is what happens when you buy something, right? And you have to either make a refund or an allowance, okay? Maybe the vendor sent you the wrong items and they offer you an additional special discount on top of that. That's considered an allowance because you're trying to return something, okay? But instead, they offer you something else and you keep those items, okay? Any questions in regards to 5.2?
No.
Okay. Well,
You
that
use
is. Go ahead.
sorry, you use the same purchase return and it doesn't matter if you return or you take the discount, right? It's the same.
In this case, they function the same thing. You can separate it if you want to, because a lot of other companies, they'll have like one account for specifically purchase returns, and then they'll do one account for purchase allowances, and then one account for purchase discounts. You could do whatever you'd like, but I'm just showing you that At the end of the day, purchase returns and allowances, they both do the same thing. So I just created an account where I just added them together.
Mhm. Okay.
Yeah. So in this case, it doesn't matter in this, but you just have to make sure that this isn't a normal discount. This is a discount that you're getting a special offer for. Okay, so do not confuse that with with an actual purchase discount. A purchase discount is when everybody and anybody can get it. This is a special discount because something went wrong.
Mhm.
Okay, well, that is it for 5.